Is there financial wisdom in the crowd? Companies like Brewdog, Chilango, and Camden Town Brewery seem to think so. New research out today shows how fast companies have been flocking to crowdfunding and peer-to-peer lending. But we ask, is the whole industry dangerously frothy, and are investors ready for this ride? The idea at the heart of alternative investment is a good one. Bypass traditional bankings, democratise investments. After all, at the end of the financial crisis, banks pretty much stopped lending to small businesses altogether. At the same time, savers stopped earning money on their pensions thanks to ultra-low interest rates. So why not put these two groups together?
What better way to fund, the growth and development of your business than with your guests and fans? It's been our ethos from day one.
But some question how much these fans understand and if the information they need is transparent enough.
We have to recognise that those who are now being given the opportunity to invest in these assets may not understand the risks inherent in what they're investing in.
The alternative finance industry is made up of peer-to-peer lending, which is debt, and crowdfunding, which is all about owning shares in a company. It uses the web to match companies that need money to investors who want to make it through tasty returns. In total, the industry raised £3.2 billion last year, up an incredible 84% on the year before.
So what have you been making today?
Eric Partaker left tech company Skype to set up Mexican fast food chain Chilango. Already 10 sites in, the company is cooking up plans for another 40 restaurants worldwide. He says raising money by going to customers helps with marketing the brand as well as expanding the business, though he accepts that such a fast-growing new industry does throw up issues.
Of course, there are examples of investments that don't work out. But that doesn't apply just to crowdfunding. That would apply to any investment in any financial instrument out there. At the end of the day, I guess I can only speak from Chilango's perspective and say that I'm quite confident that we presented both an exciting investment story as well as an ample amount of information to allow people to make a wise decision.
Chilango is part of a sweeping group of companies that are turning to alternative finance platforms to borrow or raise money. Crowdcube is one of those platforms. In fact, it's the biggest in the UK.
The growth has been explosive in the last 12 to 18 months. People want to invest in businesses, but they also want to be able to show or see that they're getting and making an economic difference, a social difference, an environmental difference. They find crowdfunding interesting and exciting, much more so than investing money into an ISA.
The problem is that startup businesses are highly speculative, however they're funded. Historically, 9 out of 10 have failed. The sale of Camden Town Brewery and e-car club have made a splash. But only 2 companies out of 1,200 have actually been sold so far.
We've got teams of financial analysts, experienced financial analysts that have worked at Goldman Sachs and Citibank and wherever.
And doesn't necessarily help you. I think isn't the financial crisis of 2008 proof enough that Citibank and Goldman Sachs are capable of making mistakes?
Possibly, but I think we've got some very smart people. My strong belief is that I think the crowd are making some really shrewd investment decisions. I think you've got that collective wisdom of these smart, sophisticated individuals, people that are investing a small amount of money but are a big fan or advocate or customer of a company.
But that's not exactly how Rupert Taylor sees it. He monitors deals across alternative finance. He supports the industry but believes it needs to up its game.
I think financial history is littered with examples of crowds being irrational and overly exuberant. And I think that the idea that just because the crowd chooses to fund something means it was rational to do so is deeply flawed.
So what will it take to make alternative finance a smoother ride?
We definitely think that standards of transparency could improve in the sector. So to start with, we think there should be a standard methodology for reporting failures, and we think the industry should be totally upfront about what those statistics show. We also think that disclosures could be improved.
How many of your businesses, percentage-wise, will still be going, do you think?
That's a great question. I'm not a fortune teller.
Alternative finance has gone a long way in a short time, but so far its growth has been against a benign economic backdrop. As the industry matures, inevitably companies chosen by the crowd will fail. The industry's success will hinge on whether enough information was given to the crowd to make an informed choice, even if they are just passengers on someone else's ride.